Hi guys, good evening and welcome to Editor's Roundtable. It was a week of turmoil in the financial space. The Sensex and the Nifty end down with a cut of 2%. Will we see a recovery next week? Thank you for joining in to Editor's Roundtable. I am Reema Tendulkar. Joining me is Prashant, Nimesh and Mangalam. Hi guys, I think we can all heave a sigh of relief. Right?
That the week is over.
That the week is over.
The news flow
But
never...
the weekend is ahead of us. And if last weekend is any indication, this one could be action-packed as well. Although, I mean, we don't report on it at least, right? Yeah. Not on Saturday or Sunday.
But these guys have some exciting plans.
Cricket, I believe.
Cricket.
I watch the match today, so after this show, I just want to rush to the match.
Yeah,
so
same here. I'll hitch a ride with you because there's no parking outside.
And I was lucky to watch the
you're going to sleep on your couch.
Yeah, absolutely, Reema. But what a week we've had, right?
Eventful.
Eventful and I would say historic, right? Actually, let me just go across to the big wall and tell our viewers what the week was all about, because this is, you don't see weeks like this very often, and we did see one. At the start of the week, this was being compared to Lehman, Bear Stearns, 2007, 2008. Thankfully, it turned out to be nothing like any of those episodes. But I have to say that history was written tick for tick. Let me tell you why. And the story starts last Wednesday. That is when the Silvergate Bank announced that it is shutting down. I mean, actually, that announcement came after U.S. markets shut on 8th of March, which is last Wednesday. Let's move on. The story moves forward. I mean, the turmoil started. The market started to worry a little bit, but not full-blown. And then you had the Silicon Valley Bank, which failed. It went into FIDC receivership. That was Friday. Things started to accelerate post that. Move on to the weekend. That is last Sunday. You had the failure of Signature Bank, which went down. These are regional banks as we've been discussing quite a bit. Markets were panicky. We woke up the next morning, Monday morning here, with good news that the US has stepped in to protect depositors. Also, as a consequence of this, all of this financial turmoil which was emerging and uncertainty which was there, Fed hikes were priced out of the system. They completely vanished. From 50 basis points 4 days earlier, we started the week with 0 rate hike expectations. Tuesday, we got core CPI numbers which came in, which were stronger than what was expected. Some of the Fed rate hike expectations were priced back in. Wednesday, the worry was passed on from US to Europe. Credit Suisse was suddenly the epicenter of all the panic. European markets started selling off in a big way. Thursday, you had Credit Suisse, which took $50 billion from the Swiss National Bank, and the ECB, later that evening, hiked interest rates by 50 basis points as well. And this morning, we woke up with news, that is Friday, that the US bank consortium has put in $30 billion in deposits into FRC. This is a timeline, a tick-by-tick timeline in terms of what has happened over the last 1 week or so, a little over the last 1 week. But these are just the highlights, right? I mean, we lived through what went on, the ups and downs, and boy, it was up and down many times over. Now, how has the crisis affected markets? This is interesting. Again, this is price change since the 8th of March close, last Wednesday close. And it's stunning. The S&P is down under 1% for all the troubles, under 1% lower. The NASDAQ is up 1%. The Nifty is down 4.2% with all the distance. The Nifty is the one which actually is taken under the chin. The US 2-year yield is down 92 basis points. It was above 5% a week before, a week and a half back. It's now a little over 4%. The dollar index is down 1%, and oil prices have sold off very aggressively by about 10% or so. Now, I just kind of dug in a little bit more in terms of Nifty is down 4.5%, right? And US is up. But how does Nifty compare to other Asian emerging markets? Guess what? Nifty and Sensex are the worst performing emerging markets in this current risk-off episode. So, I mean, actually the only market, forget sort of emerging or developed, the only Asian markets which has done poorly as compared to Nifty is Japan. That's it. Otherwise, we are the worst off. And, perhaps some of the reason is the FII selling, right? But there have been so many blocks, so to kind of cancel the noise out, what I did is basically take total DII and FII inflow into the market year to date and subtracted the total amount of blocks which have happened. So the total institutional inflow into secondary markets this year stands at 7,200 crores. That's paltry. That's very, very small. Valuations have come off quite a bit. The Nifty 1-year forward PE now, as of the end of Friday's trade, stands at 17.3 times. The average for the last 15 years is 17 times. But when you look at PE multiples, the discount rate matters quite a bit, and that goes back to talking about interest rates. Direction of interest rates are extremely important, and that will determine, what happens to interest rates and hence valuations, etc. And to that, in that context, we've got the FOMC, which will be meeting next week. So just thought, I'll put some of this stuff out. With the amount of volatility we've had, I have to say that markets are a little volatile. Markets are a little jittery and shaky as well. And I think it'll take some time before some normalcy, some stability kind of returns. Nimish, you've been talking to a lot of dealing rooms as well. What are you hearing?
Prashant, you put out some interesting data. The fact that Nifty was down 4%